Hey traders, Nick Shaheen here, looking at Guy Adami. We're going to talk about how he... No, we're not. No, we're not. Don't run. No, we're not. We're going to do something new today, clearly. I've never done a video about the VIX, the volatility index, the fear index. The reason why it came up to me and I'm looking at the screen because I was watching, I walked the dog after a pretty good day. Great day, actually, in the chat room. I cannot believe how smart this chat room was getting to be. It's amazing. Anyway, we caught almost every breakout and every breakdown, including the breakouts in the markets, the breakout in U.S. Steel at one point, the breakdown in Roku, and almost a breakdown in Tesla. So down below in the description, there's a link to the chat room. Check it out. It's free to check it out. Anyway, so they were talking, these guys, talking heads, about the VIX and the problem. They're saying, great run, the indiscriminate selling, I think exactly what he said, but we still have the problem with the VIX. Why is that a problem? That's a freaking opportunity. It's a gift. Check it out, okay? So this is the VIX daily chart, I believe. Yep, 1 year worth of data. For the longest time, boy, we don't have volatility. Volatility is low, whatever. So what was that? That was the Christmas crash, I believe, 2018. So that right there, that little tiny guy. Okay. So when we were here, everybody was talking about the VIX, the younger traders, and I said, I remember in 08 when it was 90, and I was like shooting that number. So this clobbered that, not the high, but we closed in the 80s. I don't remember it closing in the 80s back then. But here's the opportunity. I'm saying it's an opportunity. It's a total opportunity. So I'll show you why. When it was spiking, I said one of the theses, it was like, what did we buy? What did we sell? How do we? I was like, here's one thing I know for sure. Volatility will die down. It's a fact. It's not a thesis. It will die down. The VIX is not going to stay here forever. In fact, let's go to a monthly. Heck, I'll go 3 months. Okay, so this is a 3 months period chart that goes back to 1991. This is the VIX. That's the financial crisis. Okay, everything else pales, right? This gives it a running for its money. So run for its money, right? But this is a period of a quarter. So every candle is 1 quarter. This one is still ongoing. And so in this sense, this has lasted longer than it's ever had as far as volatility being this elevated. So the thesis is it's going to die. So there's the easiest trade, and I cannot believe people are not talking about it. You watch CNBC all gosh dang day. Not one person says, well, the one thing I know is I can short volatility. So a few weeks ago, I shared that I'm going to short volatility by buying a Lotto puts. What does that mean? The VXX, which is a sister to the VIX, is an ETN, and it seems to want to die. It has died before. They're designed to go to zero. I'll prove it. So this is the weekly chart of the VXX. Okay, this is record VIX. That's not a, that's a chart that wants to die, right? They're ETNs, so they're exchange traded notes, not ETFs. They're different. Do your homework on that. So I said I want to buy puts, and I know one thing, the VXX is going to fall. And I said it was in the 12s for the longer time. Why don't I just bet on it to fall to 20? And the puts were pennies when it was rocketing. So that's one way to do it. How far out? You pick. You can pick as early as May. That's pretty aggressive. You can pick as late as September. I mean, between now and September, I think volatility is going to die, right? So the easiest trade was to buy puts and put spreads. And I chose long put spreads. What does that mean? I'm betting against the price of whatever I'm shorting. So if I bought a put spread in the VIX, it means I win if it falls into my put spread. And where do I set up the put spread to be? I want to capture the move. I don't want to guess how far it's going to fall, even though I know it's going to fall back down to, quote, normal. They say the mathematical normal, again I'm putting quotes there, is 16-ish, right? So I want it to fall to 16. And the best benefit from that is to buy something much higher than 16 and sell something close to 16, if not a little bit lower. So as it falls, the one that I bought will have intrinsic value and time will not be as punishing. In fact, the one that I sold will die a lot faster and get closer to zero. So that maximizes the put spread that I'm buying, as opposed to buying a put spread down here or buying them both up here. So I'm trying to get as smart as possible with the stupidest trade on the planet. So I chose, something like 27.17. So it's a $10 wide put spread. It was like $1. So I spent $1 and I could make $9, even if it was $2. So every put spread and every put position I suggested, it was a double. And they were green on days where the VIX was skyrocketing and the markets were falling. That shouldn't happen. I kid you not. The volatility was exploding so much up here when we had minus 7% market days. My position should have been red, red, red. They were all green because the volatility, the implied volatility, the IV of this particular issue was exploding because the VIX was exploding. So everything gets more expensive, even the losing trades. So it was the stupidest, easiest trade I've done in a long time. Nobody talks about it. All they're worried about, the volatility is so high. Then use it. It's crazy. It's the easiest trade on the planet. And I could book it now, or I could sit on it. So if I don't have a lot of long stocks, that's a long stock trade because I'm shorting volatility. The other way to do it is to sell at the money call spreads. So basically I'm saying we're done going up as far as volatility. It's going to go down from here. It might have a few spikes, but if I sell them out in time, they're going to die in my favor. So that's another way of doing it. I do want to caution about selling in the money call spreads, because if the issue that you're selling into actually pays dividends, then you have to make sure you're not holding that short leg of the call around ex-div day, because then you wake up to the Nazi surprise. Anyway, also a different subject. Nick's signing out. This is it. I mean, there's no science to it. Plus, I do want to tell you, what was that the other day? Out of the blue. Price was up here. Out of the blue. Just one tick. I don't know what it was. Market makers. There it is, right there. And it's across 2 or 3 platforms, so it's not a TradingView problem. I've seen it on Thinkorswim and another platform. So I don't know what that is. Preview maybe? Anyway, Nick signing out. Where is my stop button? Oh, there it is.